Hey everybody, Brian Shannon here from Alphatrends.net. Today is Thursday. It's the 17th of April, 2014, and we have a long weekend coming up, so the market is closed tomorrow. This will be our end of week wrap up. We saw that the S&P 500 and the major equity indexes all posted nice gains here this week as they bounce back. We're still negative for the month, but the S&P 500 is back to the positive column for the year to date, whereas the NASDAQ and Russell 2000 are lower. So this week we saw big gains, obviously in equities, whereas gold and bonds sold off a little bit here. Let's take a look at the charts. On the daily time frame of the S&P 500, we got back above that 50-day moving average in this prior support level. So what I had been talking about coming into this week was that as long as we were below a declining 5-day moving average, the market was guilty till proven innocent. Well, we had a pretty volatile session on Tuesday that looked like it failed at the 5-day moving average, but it came back up and held there, and now what we were talking about was I was saying it would need to get back above and hold above 184.5 for the buyers to regain control of the intermediate term trend. So they've done that. This week on the chart, on the blog rather, I have the quote from Charles Darwin rather, which is, it's not the strongest or most intelligent who will survive, but those who can best manage change. So we have to be flexible. I talk about it all the time that yes, guilty till proven innocent while we're below a declining 5-day moving average, but when the market gives us new information, it breaks beyond this prior level of support, then we have to look at it and say the buyers have regained control. And we were looking at this week at that 184 to 184.5 as a potential level of resistance, and I always am very clear about it's a potential level of resistance when we're below it. There's nothing here that indicated that it was going to slow down on Tuesday afternoon at that point. It was a potential level of resistance. We did get one little reversal off of that on Wednesday, but the market regrouped its strength here and was able to recapture this level. So again, be very clear that prior support tends to act as resistance. It won't always do it. We only know resistance after the fact. We look at it and say, here's a potential level. I don't want to be an aggressive buyer. Now, in this case, looking at it with perfect hindsight, it would have made sense to buy there. That's not typically the way it goes. It's a place to slow down and assess things and say what makes the most sense right here, right now. And at that point, I didn't think it made sense to be a buyer into Tuesday afternoon strength, and most people didn't, which is why we got the gap higher. The market doesn't like to please everyone at once. It makes the job difficult. We are above a rising 5-day moving average, so the intermediate term trend has turned more neutral here and more positive actually. What we have is a possibility. What I'd really like to see for next week would be to see some kind of pullback down towards 185, 185.5. If that were the case, then we would see that this little area that is expected to be a little resistance, 187 to 187.10, potential resistance that is. If we turn away from there and create a higher low near about 185, maybe 185.5, just hold above this rising 5-day moving average, then we could be building what I've drawn in here is a inverted head and shoulders pattern, which we'll see if that happens. But for now, the ideal scenario would be for some pullback, for the market to retest, not to retest, but come down and maybe test the 5-day moving average. From the low 3 days ago, we can see the volume weighted average price is down at about 184.75, and that number will continue to change. Of course, it will continue to advance even if this market declines. That is the low from Tuesday rather. I'm sorry. Anyways, the market is back to kind of more neutral here on the daily time frame, I think is the proper way to look at it. But intermediate term trend, we're in an uptrend, a little bit extended here, so we still have to unfortunately go extra careful, and that's especially true because we have the we're in the middle of earnings cycle. Today we saw a Google report and they gapped down. It wasn't a disaster the way some people were calling it, but it's still in a downtrend here and still having trouble. We saw CMG report earnings today. They gapped up huge and then they gapped up big and sold off real strong. If you take a look at the 5-minute chart, the people who bought at $580 in the morning certainly weren't feeling good at it about it at when it was $519 into the close here today. So we've got to be extra careful, and the same thing can go true in the opposite direction. Citigroup looked like, hey, it's breaking down here, and from this failed breakdown came this fast move higher. Now Citigroup is still kind of an ugly, messy chart, but the fact is the obvious move, the short below that support level, is often wrong, especially after it's already declined 10% to get towards there. Anyways, let's go back and look at the NASDAQ now. The NASDAQ on the daily time frame, we can see we did take out a new low this week intraday on Tuesday, and as we often see, a lot of times we get a new low that takes it out by a small amount, and then we get a short squeeze rally. It's not smart to set your stop underneath these little lows right here after the market has already declined from 91 to 84. The people who are selling here clearly haven't been paying attention, because we've been in this downward trend in the NASDAQ with these lower highs and lower lows. And the year-to-date volume-weighted average price in the NASDAQ is up here at about 87.75. So it's still showing a lot of people a lot of difficulty in the NASDAQ. Now looking at the 65-minute time frame here, we can see that we're up to a fairly important level. This prior support has the potential to become resistance. We're at the declining 20-day moving average, or just below it, but we're still above a rising 5-day moving average. So next week, if we can see 85 maybe to 85 and a quarter become our band of support, if we can hold above that, then perhaps we're in a position where this market can turn back higher and perhaps go up to test the 88 level. But for now, it's a stock by stock basis really is what makes most sense, and you have to look at it again with the fact that earnings are coming out at a rapid pace, and you could get blindsided if you're not aware of when a company is due to report earnings. So be sure you know when your stocks are reporting. Russell 2000, we've got a declining 10, 20, and 50-day moving average. We've got this market showing this pattern still of lower highs and lower lows. There's nothing to say that this market can't turn higher, but that 50-day moving average and the prior high right in here are likely to become an area of resistance, and we've got 115 is our volume-weighted average price year to date. So looking at a 65-minute time frame, we're getting a bounce. What I'd really like to see, and we'll drill back down to a 30-minute time frame now, would be a pullback down towards 111.75 to 112. If we can do that and hold above that 5-day moving average and then create a higher low, then perhaps we get the ability to go up and test some of those other levels, such as that 115 and a quarter-ish area. That would be the best case scenario, is for it to pull back and then rally. That's really because right now we don't have a higher low intraday to measure risk against, and that rising 5-day moving average would be an ideal place for it to find a little bit of support. The semiconductors got back nicely above that 44.40 to 44.55 level. This had been the prior support. It seemed as though the market was finding resistance and would turn lower, but of course what we saw instead was we had a real healthy rally, especially today, that was up 1.25% and back above this important area. So this will be important once again, and obviously the lows for the week will be. The daily time frame in the semiconductors, we found support at basically this prior low right in here, which was resistance earlier in the year, and the rising 50-day moving average. Now, I would say that if we get back down below 44.50 and hold there for more than a half hour or so, then you would want to become a lot more cautious in this market. Ideally, though, we pull back a little bit and then get another rally attempt. That would really be the best case scenario, and you can see here we're right at this little trend line from the highs of the year. The financials were up 4 pennies today, and you can see in here, let's back it up to a 65-minute time frame, that this had been a real important area, and we were looking at it to be potential for resistance basically in this general area. We're still in that general area, so we've rallied a little bit. Now let's see if the market can pull back, create a higher low again, probably near the 5-day moving average, maybe near 2160. I think would be okay. If it can do that and then push back up, then I think you're going to have a lot of shorts that are trapped. But the daily time frame is really looking kind of a little bit more neutral than anything. So it's tricky, and it's a stock by stock basis. Looking at so for instance the biotechs, they're still in a horrible downtrend here. They're not showing any real signs of stability, nor have they since this sell-off really began. That red moving average is the 5-day moving average. We have not seen that 5-day moving average flatten out and then make a higher high above it. Perhaps next week, if we can get back above this level right here of about 226, then I think that then the biotechs could experience a little bit further bounce. But they're still broken, and they're still going to be very difficult to turn around. Like in stocks that are broken, like Yelp, still not showing any signs of turning around. Shutterfly still down there. Triple D is still, and it's going to take a long time for these to go. If you're looking for intraday bounces, perhaps Triple D above this level with a stop down here, that's fine. But really, don't expect that you can buy back into Triple D and that you're going to be holding for a long time. I think that you have to look at it as a potential trading opportunity, just like data, maybe above $66 a share, but it's still a broken stock, as is FireEye. These things are really just refusing to show any real bounces in here. So I think a lot of people were getting burned badly. This past week on Alphatrends, we had a great winner in GLNG. And that's the second week in a row that we've traded this one successfully. We got involved at 42.70, and we're actually stopped out yesterday right around in here. Some of the stocks that didn't work, actually that did work, but I mismanaged were, so for instance, CHK. I had that one as a buy above this level, $26.90 on Wednesday, and it moved nicely, and I then raised the stop to break even at this point, and we got stopped out of it and missed this big move. So that's one of my weaknesses at times, is that I keep my stops a little bit too tight and let go of a nice winner like this. Same thing happened with MRO, which is basically the same chart. We bought in right here, raised our stop to break even, got stopped out, and then the stock continued to rally. So nobody's perfect. You have to choose which time frame makes most sense to you. And as I tell subscribers, this is where I'm suggesting a stock. If you like it for a longer term, perhaps you want to adjust it. But for what I look at it is, if it's not making me money as a day trade after it rallies, then I want to get out of it and make sure I don't turn it into a loser. You can always get back in, of course, or have a wider stop if you're looking for multiple day moves, which in this case, MRO and CHK had some great looking charts. For next week, a couple of the names I think to keep a close eye on would include IPGP. I don't know when the earnings are due on these companies, so keep that in mind. This one's got a little bit lighter volume, only about 380,000 shares, so be aware of that. But getting above these highs, IPGP's held up really well in this market and has a lot of energy built up. I think it could move nicely above those levels. I think it was $75.70 or so. Maxwell's another one. MXWL got some energy building up in here. Perhaps we're going to see this one back up near $16 a share. I think that we've got this band of little resistance up in here, but it's looking good. I'd also say keep a close eye on stocks like Plug Power. Plug Power, if you look at the short interest in here, we've got 30 million shares short. Now, just at the beginning of the year, it was 11 million shares. From March 14th to March 31st, they added 8 million shares. So from March 14th, which was right here, to March 31st, which is right here, the shorts added, what did I just say, 8 million shares. So if we take a look at the volume weighted average price during that time period, you can see that it was $7.02. So I say that the average short of those 8 million shares added in this date were short at an average of what what was that number I just said? About $7.10. Well, the stock is above that and it's holding up nicely. Perhaps Plug is going to need to get back above 770 or so to get going, but I think that it's definitely worth keeping an eye on, as is Fuel Cell. Fuel Cell is another one that, it's holding this rising 50-day moving average. It trades plenty of volume, 19 million shares a day, and maybe getting back above today's high, 245, or maybe it's going to take 250. But either way, this 245 to 250 looks important to me, that if it can break beyond that, then I think that you could see a little bit of a pop in there. Another name to keep an eye on, maybe if you're an investor, would be Cisco. I don't personally trade Cisco. I find it to be a slow, boring stock, but it's looking like it's making that pattern of higher highs and higher lows once again, and I think you could buy it in this general area with a stop underneath Thursday's low. So anyways, there are some ideas for you. These are the types of ideas I talk about all the times on Alphatrends. It's not all winning trades. It's not all, but when we have losing trades, they tend to be very small unless we get blindsided by something and we follow a strict methodology. So as I say each week, if you haven't taken a free trial, go ahead and do that. I think you have extra incentive to take that free trial this week, because you can lock in the prices that are on there now. Next week the prices are going up, and it's been a long time since I've had these prices down at these lower levels, so I'd invite you to take a look. If you like it, then lock in the lower price while you can. Have a good weekend.